So what is so interesting in the power of social media is how we actually met. So I
Yes.
believe this must have been 18 months ago, 2 years ago, and I think
so.
you were just moving into your new business. And I'm not sure if I reached out to you or you reached out to me. It was something like, hey, if you're looking for someone to get your clients finance, here's my details, whatever. And then I was really new into real estate. So I messaged back and said, hey, let's catch up for a coffee. It would be great to meet you. Obviously, I'm trying to build my network as well.
Yes.
And we met at this beautiful cafe in Fremantle. Do you remember?
Yeah, I do.
The one upstairs?
Yeah.
And I was waiting out the front. And obviously, I'd seen your profile picture, so I kind of had an idea of who I was being ready to meet. And then here comes this Hilux ute with baby seats in the back, up the curb, parallel parking. And I'm like, I think that's Candice.
I'm definitely, yeah.
And then you get out of the car, immaculately dressed. So, like for the viewers at home, what I'm trying to explain here is like it looked like the car just come from the farm.
Bush basting.
Yeah, it looked like it just come from the farm with two baby seats in the back. And then here comes this beautiful lady, steps out of the car, hair done perfectly, and just with all confidence. Hello, Ryan. I'm Candice. Let's have a coffee.
Yeah.
And I must say, the only thing that I didn't like about that meeting is that we didn't have breakfast.
Oh, I
we
know.
sat there
got distracted.
We sat there for about 45 minutes talking all things, real estate.
Yeah.
And then we didn't eat.
Yeah, I know. That's okay. I get very distracted because I'm one of those people that I just keep going and going, which we'll probably learn today that I don't stop talking sometimes. So
And has that always been a trait?
Yeah, probably. So I just want to go back to the car.
Yes.
Because I come from, I've had nice cars in the past.
Right.
And when we had kids, I was
mate.
like, I really don't care what we drive. I've driven a Jeep. I've driven a Merc in the past. And when it got to having kids, I just thought, you know what, let's just get what we need. And
Practical.
we wanted to go camping and we wanted to do things like that. And my hubby, he ended up going into a big truck because of work.
Yes.
That he does want the car back himself.
Oh, okay, right.
He wants to put the some of his workers in the truck so he can have the car. And I said, I really like the car because I can fit everything in the back of it. So
and the kids, it would be easy for the kids too,
They
right?
love it. They put all the bikes in the back. So we have fun with that car. We've gone camping up north with it and taken our camper out to all sorts of places. So we love it.
Perfect.
It's good fun.
So tell me a little bit about yourself. How did you get into this industry? But firstly, were you born, bred West Australian?
Yes,
Okay.
absolutely. So born and bred Perth. And that's probably where a lot of my content comes out. I just love talking about Perth and I definitely have a soft spot for Perth.
North or south of the river did you grow up?
I'm north of the river and still
so
I know
disappointing.
I've made my journey down here today. I didn't even know what it looked like down
If
here.
anyone that doesn't live in West Australia, there's definitely a
divide.
rivalry between those that live north of the river and those that don't live south of the river. So just so I can clarify it, if you're south of the river, you're better. That's pretty much.
We did have our wedding in Fremantle. So
okay. Geez, that's right on the border.
Yeah,
right on the border.
That was
so
as close
a
as I
quick
got.
exit back to the north, or
Hey,
was that because you wanted a quick exit back to the north?
No, actually, I have a little soft spot for Freo too. I love it there.
It is nice.
So
isn't it?
yeah, it's beautiful. But yeah, back to how I got into it. Now, my journey was just all over the place. It wasn't straight into finance. I did hospitality, fashion, like everything under the sun, basically, fitness. And what happened was after school, I didn't do anything that actually allowed me to get into uni because I didn't want a bar of it back then. And basically, I went into the workforce, did a whole bunch of things and realised that I fell into a position where I was doing a bit of bookkeeping and I realised that I had a bit of a flair for numbers. So I thought, okay, well, I'm going to have to take the hard route to get to uni now. So I did accounting in TAFE. I went to uni after that and did accounting and finance. And then after that, I went into the workforce and that's when I got my first finance job where I ended up for nearly a decade in a couple of different banks and even car finance too.
Right.
So, yeah, but my bread and butter really is residential mortgages.
Yep.
I was a credit analyst for many years doing that.
And what's a credit analyst?
So a credit analyst is exactly the person that you will submit your loan to the bank, and that is the person that will decide whether you get your loan or not. So I was literally declining and approving all those loans, and that's where I get all of my experience from. Read thousands and thousands of bank valuations and approved thousands of loans as well, and declined a lot too. So I know exactly what it requires to actually get the deal done. And because I was the one saying yes or no and having that authority to do so. So after many years of doing that, I fell pregnant and ended up having a couple of kids. And after that, I thought, I really want to be able to bring that knowledge direct to my clients and be in contact with them directly rather than hiding behind the screen and doing it all from the bank. So the biggest thing that drove me to start my business was to actually provide and empower people from the beginning before it actually gets to the bank, so that they have that knowledge at the start and can go, okay, there is really a good plan now to be able to have it approved the first time.
And do you think that was your why? That was
Absolutely,
your why? Because that was one of my questions, which you've answered quite elegantly, because it was you'd obviously come to that position where it's either I continue working for the banks or I go off on my own direction, which you have. And if you wouldn't mind telling the audience and our viewers your business, the name, how they can find you, all that sort of stuff.
Yeah, so my business is called Baycrest Finance. Now, we can do loans for not only residential but commercial, and we also can do lending for businesses. So we also provide SMSF lending as well, trust companies, the works. So everything that I was able to do in the banks, I now take out direct to client. And the biggest positive with what I do now is I'm able to talk to the client at the very start, understand what the plan is, and then I can ensure that I place it in the right spot. So having that knowledge of being able to and knowing how the banks actually see the deal before it goes to them is so powerful. Because I do see what I saw a lot when I was on the other side of it was, unfortunately, there was a lot of brokers out there that would kind of tick and flick and see what happens. And it was a lot more prevalent than you would think, because that is a big thing. So you would think that the broker, it's hard to know whether a broker is doing a really good job or not, I feel. So when I started my business, I thought, I really want to be able to provide that knowledge at the start rather than tick and flick and see who does it, and then putting marks on the file along the way as well, and also putting declines on the file. So
so you're not just a business that's trying to just generate business. You actually got a genuine interest in the client. You're not just seeing it as an application, you're seeing it as a human transaction. And I think that's very powerful. And I think a lot of people would respect that. Yeah,
and a lot of unfortunately, there is a lot of businesses out there that do treat it highly transactional. And I have a lot of clients come to me who say that they've been pushed to multiple banks. So like their last broker has submitted it, and then they've gone and it's been declined, and then they've gone and tried again and again. And that's just not the way that I operate at all. The way that I operate is that I do a full assessment basically at the beginning, like as I would have when I was in the bank, and I really understand exactly what is the position of that client. And then I can understand where I can place it because of the knowledge of all the different lenders that I have. So it's doing the work up front rather than doing it at the end and then having the issues later as well. So a lot of the time people don't even realize it's been to a few different banks. So
because you triggered a question then.
Yeah.
How is it? And you may have already answered the question, but how is it that sometimes you can apply for a loan and it can be instantly shut down from one bank, and then all of a sudden the application goes through to another bank and then they give you the loan?
Yeah, so that is very, very heavily policy based, and all of them have very different calculators as well. So that is where it is so crucial to know at the start how each of those lenders are going to look at it. So that is the work that a broker does. And if they're a good broker, then they know well before they send it anywhere whether it's going to be approved or declined. And I pride myself on the fact that I actually haven't had any deals declined, because I already know before it goes through that this is a winning file, and I know exactly how to package it the right way. The way that I like to do it is I like to have a holistic approach where I'm trying to understand more of a long-term goals with client as well, not just this is just one transaction. So when I have those conversations, it's like where are we going from here? Is it just one and then you're going to be having a handbrake on and not being able to do anything in the future? Or is it we do this still and then there's capacity to do something else very soon after? Or, you know, are we pushing to the limit now so you can get the best asset possible? All those questions and those conversations are done prior to any application going through to any bank. And that is a lot of work that gets done at the beginning rather than at the end, and then going, oh, I'm not sure if that was the right loan for me. And I've even had that in the past when I wasn't a broker, and I've dealt with other brokers where I've thought about it later and gone, oh, why did I do that P&I? Shouldn't I have done that as interest only because it's an investment, and all these other questions? But nobody said it to me that back then.
Yes.
And that's where I'm going, okay, well, these conversations need to happen at the beginning rather than after it's already done. And you can't do much once it's settled. You have to do a whole another loan application, and you got to go through the process again to untangle things or change the way that they're set up.
Yeah.
So it's a process.
It absolutely sounds like a far out. So I really want to dive into the budget that's just been released. What's happening at your level with taxes and the capital gains tax reform? Mm-hmm. I want to hear from an expert. I'm confused. I actually don't. I don't know. Do you know what I mean? I was chatting to a friend yesterday, and he asked me to explain it to him. I said, mate, I don't even understand.
Yep.
So I'm not sure where to start. I might take your lead on this.
Yeah.
The recent announcement and the changes to capital gains tax. Take it away.
Yeah. So for me, obviously, there's a lot of politics around this whole subject. I can go into explaining kind of how it affects lending and how it affects borrowers. In terms of the CGT, that does obviously it of course affects people in property investing, even small business or larger businesses as well. There's changes that have occurred in trust lending as well, because people that have properties in trust, they're going to be affected by the 30% tax as well. So there's a lot of things that you do really need to speak to your accountant for the tax implications and how it affects you. And a lot of these changes haven't fully come into legislation yet either. So things are still changing. However, a lot of the banks are already putting in place changes on their borrowing capacity calculators right now. So in terms of that, with the thing that affects borrowing capacity is the negative gearing side of it. So negative gearing is when I can explain it for you. I will try and explain it as simple as I can. So when you have your tax return and you have any investment property, you basically have a schedule in that tax return which is for that investment property. So you've got your rent at the top, which is your income for that property, and then you've got all your expenses. So it could be depreciation, it could be interest, which is for the loan. It can be maintenance and any other costs that you can actually deduct. So previous to the budget, we were able to have all those losses would be taken off rent, and then if that becomes a loss, so say for instance you had 20k of rental income, and then you had 25K of expenses. So you actually have a 5K loss. So previously, if you were, say you had 100K in your salary and you had that 5K loss, your income now is 95K. So it actually reduces it down and it gives you that tax deductibility for that property. So now after the budget, the change is if you go to purchase a property after the 12th of May, and
This year,
right,
so it's in place now.
Yeah, so if you go to purchase a property after the 12th of May, which is an established property,
Yep.
then you don't get that negative gearing benefit in your tax return. However, the thing that a lot of people don't talk about is that what will happen with that loss. So say we talk about that 5K loss again. So it won't come off your 100K salary, for instance. So your salary will stay in the tax return as 100K and you'll get taxed on that 100K. However, that 5K loss that's in that schedule, that will remain as a carried over loss to the following years. So even though you may not be able to deduct that off that current year, if that property becomes positive in the next few years, you can actually deduct it in the future. So I don't know whether that gets a little bit confusing.
So, but then if it's a
carry.
But if it's a negatively geared, so that are you mentioning if the property becomes positively geared?
Yeah, in the future, yeah.
Geez.
Yeah.
Fingers crossed. But if it doesn't and rent decreases, the loan value obviously stays pretty steady for at least the first 10, 15 years until you start getting through that, principle of the loan. So if it's continually to be negatively geared, you won't be able to. How is there a cutoff point and how much that can continue to roll?
Yeah, that would probably be a question for your accountant. But generally, in the first few years, if there are losses, yeah, you can carry it over, and that is you have to definitely talk to your accountant about that. But in terms of how it affects you right now, you won't be able to reduce your gross taxable income with that at the moment if you purchase an established. But the way that the government is running it is that if you purchase a new build, you still can. So that's where the incentive comes in, where they're saying, okay, if you go and add to the supply on the market, then you're able to actually still negative
for the life of the time that you own. But then when the next person buys that property, they're not afforded the same.
Because it'll be established after.
Right.
So, but anything that was before, so I even have clients now that their contract was signed before the 12th of May, but it's not yet settled. They're actually protected because it's grandfathered.
Right. So I have a client that has just bought a property from me.
Yes.
And that was signed in April.
Yes, so she'll be protected.
Wow. How lucky
so she
is
will
that?
get the tax. Look, at the end of the day, we should not be purchasing a property for the tax deductions, right? It's really important to choose an asset that is a great growth asset. It's a quality asset. It's not just because you're getting tax deductions, right? So, and a lot of the time it's not a crazy amount at the end of the year anyway. It might only be a few $1,000s that you may get back. But where it really affects people, I guess, and I would probably say it's more early stage investors, mums and dads, the ones that have maybe one or two investment properties and they are negatively geared at the beginning, that's where they will probably feel it more so. So reducing that, yes, it does affect some people, but really over time, your property should become positive anyway. And a lot of people that are grandfathered, their properties are already positive. So it's just one of those things. After a few years, it does flick over, and you end up paying tax anyway. So yeah,
what about
pay to play.
What about when you sell?
So when you sell, so that's a CGT. So now I'll go back on the negative gearing because it's very important to understand that with the way that it's affected borrowing capacity is where people have kind of gotten a little bit more upset, I guess. Now, with investors, anyone that is now not protected, so you're purchasing an investment property after the 12th of May, that actually reduces your borrowing power now, because on the lender's servicing calculators, you're not going to get the tax deductibility on that loan. So it's actually dropped borrowing capacity down quite dramatically. And that was, I guess, the whole idea of bringing it into play so that people like first home buyers will maybe have a better chance of getting into the market, because the investors are now have reduced borrowing power somewhat. So it is a little bit controversial in the fact that I don't know whether it's really doing what the government are intending to do, because bringing down that borrowing power for some people that were in fact going to invest in established properties, that may mean that they're going to go for properties that are a little bit cheaper now and still go for it anyway. So, and then that potentially is pushing that lower range, really, really targeting that market and really boosting that area of the market rather than the higher end. So it's, everyone has a very different opinion on it. So
if I have a property and I sell it for a gain, I have to pay, even if it's my primary residence, do I still have to pay this 30% tax that they're talking about?
No. So if it's your principal place of residence, that has the exemption. You don't have any capital gains on your home. And that's where people will potentially may change their strategy now, where rather than going and purchasing a investment property in their personal names, maybe they would look to upgrade now and then not sell any investment property. So this is a whole nother thing too, because with they're trying to boost supply, but really people that are grandfathered in this whole negative gearing, they may hold on to properties more rather than be selling them off. Because if you change your owner occupier right now, this is a bit of a loophole, I guess. Your
Heard it
owner
here
occupier
first. This is an exclusive.
Your principal place of residence right now, if you decided that you're going to go purchase another house for yourself to live in, and you converted that property to an investment property, it's grandfathered. So some people will choose to hold on to that instead of selling it off.
So I sell my property that I'm in now. I buy another property. I lease that property out.
You can. That will get negative gearing benefit. That will get tax deductibility on it. Yep. So it is a bit of and that's where it's funny, because I guess the whole idea of helping younger people, I don't know if that's really going to achieve that, because if you were trying to help more people get into the market and then you're grandfathering the people that already have the property, how is that helping people come into the market that don't already have property? So, So
where do you see these changes? Where do you think the biggest sticky point's going to come?
Yeah, well, I'm definitely seeing reduced borrowing capacity because of it. People are changing strategies now, for sure. So they may be, like I said, they may be deciding to maybe change their strategy in the way of potentially just upgrading the owner occupier so that they're not paying any tax on the sale of that, and then purchasing a property and just living in it rather than investing in property at all. So it does scare off some people. But then other people that are seasoned investors are not, these changes don't really, it's just a part of investing. There's always going to be tax, there's always going to be government changes, and we never know what will happen in the next few years. It may change again. So it's all part of a long-term horizon. It's not just thinking about 1 year and what's going to happen this year, because we don't know. Rates may come down next year.
Well, and that leads straight into my next question. We've had 3 rate increases over the last, or 3 months essentially. What's your expectation through the second half of the year with rates?
Well, that's the interesting one. And if you ask the major banks who have lots of economists working inside the banks, they all got very different views on it. So some of the majors are saying that it's going to stay on hold. Some are saying that it's going to reduce, and some are saying it's going to increase. So who's right? I don't know. Like, we don't have a crystal ball, but
what do you think?
I don't know, because
Yeah.
it's just, I can't
It's a
say.
guess, isn't it?
Yeah, it's a guess. Like, no one can predict the future. And if they do try to predict the future, they very well may be wrong anyway. So
you know what?
There's no point like
Yeah.
trying to predict it. What you can do, and what I try to tell my clients is, you can devise a plan to have buffers in place so that you can ride those waves, right? So there's always going to be interest going up and down, and there's always going to be government changes and budgets and all this sort of thing that happen in the economy. We don't know what's going to be around the corner. Last year we had three rate rises, and then around the corner there was a war going on. So it's just, you don't know what's going to happen in the future. But what you can do is have your buffers in place so that you can ride those waves, and then over the long horizon, again, you're planning to hold for a longer term rather than just flicking and gambling.
Yeah.
Like it's basically that's not the way that I like to think about investing. I like to think about it as a holistic strategy of.
I'm sure we've all got those people within our circle that have got the get rich quick schemes, there's certainly some that are successful in it, but there's a lot that are silently still recovering from those. So I like sensibility and slow and steady. One that a saying that is often said to me is it's a marathon, not a race, because I tend to sprint towards things when I get an idea. So I like that strategy because it's not a strategy that everyone likes to.
It's boring.
It's boring, right?
Isn't
Exactly.
it?
It's boring. Not
Yeah.
everyone likes to talk about it because, it's boring. Everyone wants that, I'm going to be rich quick.
Yeah.
And it's very easy to go on to social media and see perceptions of wealth. I do like that strategy. And one thing I'd love to chat to you about is first home buyers. Mm-hmm. And the reason I want to talk to you about it is because instead of going down the narrative of poor first home buyers, they're not going to ever be able to get in the market, I want to be able to shift that conversation and say, right, how can we get you into the market? Mm-hmm. What do we need to do to be able to get you into your first home to help you build? Now, and as a perfect example, my wife and I, we bought our house in Rockingham for $450,000. Mm-hmm. That was a stretch for us. And we are by no means other than luck, and I mean absolute luck, has the property market increased, and we now sit with equity in our home. That had nothing to do with anything about timing the market, time in the market. It was just that we saved a deposit and that we took the dive. I want to be able to share some sort of hope and guidance to first home buyers, because I know it's scary. There has to be some sacrifices. Smashed Avo every week ain't probably on the menu, but how can we change the narrative? Just deal with what we see, and how can we help navigate them into the property market if they're considering it? And what are some things you'll be looking at when they come to you for advice?
Yeah, there's so many different options now. Obviously, there's government grants and there's first home buyer scheme, but there's actually I have a new lender that's actually doing it, and it's good to know about, because I guess we hear in the media just about the Key Start and the 2% and all that, the first home buyer grants, the stamp duty exemptions and whatnot. But if somebody is actually thinking a little bit differently, they may want to stay living at home with their parents, or they actually want to buy it as an investment property. That's actually a real option too. And I have a new lender on board where they're doing a 2% deposit, and it's for an investment. They can purchase investment and stay living at home with their parents if they want to do it that way. And that is really, really powerful, because people are starting to do things like rent vesting now, and they're thinking outside the box. And I feel like the newer generation are really, really, they're really creative in the way that they do things. They're on AI, they're doing crypto, they're doing shit. Like, there's so many different ways that these younger people are able to create wealth, and they're building businesses, and it's amazing to see. But I would hate to see them just put property to the side completely, because it is an amazing thing that, you know, they can actually live in one day as well. So they could purchase it as an investment and then turn it into an owner-occupier later on if they chose to do it that way too.
I'm sure mum and dad would appreciate if they got out of their spare bedroom too.
Yeah, exactly. But yeah, there's so many different ways, and I just would love to people to understand that there is more than just what you see on the media for that too. There's so many lenders out there that do different options for first home buyers as well. And when it comes to, you know, savings, yes, you can do it on very low deposit. When it comes to coming up with certain deposits, if you do want to put a larger deposit in, and you can use guarantors, so you can have your parents help you if they've got a property, which if they're in Perth, I'm very sure they would have a lot of equity in their property in Perth. So they can put that up to help their son or daughter along with that too. So there's family guarantees. So there's so many different ways that you can do it. In terms of, you know, spending, now that it's so important. If you are thinking to go into a loan, really having a sweep of what your current situation is and what your spending is. When it comes to, you know, if you can get rid of your afterpays and all that, I think most people know that, but if they don't know that,
and
then
and if you're still struggling with your afterpay, it's okay, because my wife comes to me often and says, I'm in a little bit of trouble. I need some help getting bailed out of this afterpay. So, and my wife and I were in our 30s. So even if you are in your later teens, your early 20s, it's okay. Sometimes things get away from us.
Yeah. And the credit card, you know, what happens when it goes to the banks, they take the limit. They're not just taking what's owing on it. So if you can really reduce that down, that can help a lot with your borrowing capacity. Any car loans are massive, because they usually are quite a high monthly repayment, and that really can smash down your capacity.
I remember, you just reminded me of a story, and I really like this topic because we're talking about first home buyers getting into the market. But it's one thing going to the bank and saying, what is my eligibility? Yes, you've got the 2%, but one thing that worries me about 2% is that if you've only got 2%, and I'm sure that's a lot of money, right? I mean that respectfully. But if you're unable to sustain a budget, regardless of how you achieve that money, if you can't prove that you can save and continue to put away and live within your means, once that debt's there and you can't service it, the level of stress and anxiety that's going to come from that is huge. So yes, don't get attracted to the carrot of a 2% loan. It's great that exists, or a 2% deposit, pardon me, but just be careful that you can manage it and service it. And one thing that was told to me is that work out what the loan is. Just go onto like NAB or whatever your calculators are. Work out what those repayments are, and then give it a couple of months and just putting that money aside when your pay comes in.
Yeah, that's a great idea.
And if you can service that comfortably, I think you're ready to make that step. But I just want to go back onto what we were talking about before. Cars, right? I remember when I was 18, I was just graduated from my time in Navy, and one of the first briefs we got was from novated leasing. Now, at the time when I come out of recruit school in Cerberus over on the eastern states, that we had a whole heap of things, of people that just talking about money and whatever. And for whatever reason, and I look back now and think it's so silly, this is in 2009, you got these recruits that come straight out of recruit school. Most of them have never had a job and were on, $48,000, $50,000 a year. And we had these novated leasing people come in, or, that type of business, not just shouting out novated leasing, but they said, hey, did you know on your salary and your no overheads, you can get this beautiful car? So a lot of the recruits were signing up to these cars that were, $40,000, $50,000, $60,000. And that was fine because we lived on base. There was no overheads. All our meals were catered for. We were essentially living rent-free on the base whilst we're doing our training. But guess what happened after 6 months? We all finished our training and we all started getting posted around different parts of Australia. Well, you get to Sydney, there's no room on base. You have to go rent somewhere. Oh, but 90% of my wage goes to my car. So like, and you're 18, right? And then now you're servicing this debt, and then you got to go to C, and now you're at C, and you've got this beautiful car that you're not driving, and it's depreciating. So
it's depreciating so quickly.
I want to go back to on that. So cars, credit cards, afterpays, how are they affecting your borrowing capacity?
Yeah, so they get put into the calculator, and it brings down your borrowing capacity quite a bit, especially if it's a large repayment on a car loan. So I would, obviously talk to your broker, and this is a big thing. Like I say to my clients all the time, it's worth having conversation early. It doesn't matter if you're waiting, I don't have the deposit just yet, or you're still working. That's fine, because having the conversation early on, and then we can devise a plan. So you may have already made a few, you've done a few things previously, but we can devise a plan. Okay, can we pay it out? Can we get it down? Is there a way that we can actually either remove it completely so we can really boost your borrowing power up now? So having those conversations early with the broker, it doesn't go to the bank. It's not getting pushed into an application. It's not going on your credit file at the start. It's having those early conversations and devising a plan, and then going, okay, it might not be right now. Maybe it's in a few months' time. What can we do? And what does that look like when you are ready? So that's what I like to do with my clients, so that they are in that position. I don't usually have, I have a lot of investor clients, have a lot of a mix, but I do sometimes get first home buyers, and I really have a soft spot working with those clients, because it's really, it's good fun, firstly, because it's exciting to get your first home. So I do love working with those types of clients as well. And it is so important to have that information up front so you know exactly what you're working towards.
What do you think some red flags are when borrowing money from banks?
Do you mean like directly from banks, or
or just in general? Like, is there any red flags you should look out for?
Even broker?
Yeah.
So, really, I think it is important, this, it may be putting it on the clients as well. And, there really needs to be a cohesion between the client and the broker. You need to be able to ask the questions and feel comfortable to ask those questions. Okay. No question is a silly question. Finance can get really confusing for people, and there's a lot of jargon involved in the paperwork and whatnot. And that's exactly what your broker's there for. They are there to guide you through it all. If there's questions there, you ask the broker, and they should be able to explain it all to you. So that's firstly, I guess, make sure you're asking the questions to the broker or the bank. If I wouldn't advise to go direct, but because I'm a broker, of course, maybe I've got a bias there. But, when you are, make sure you ask the questions, and the broker, now, if they're not explaining reason why they're recommending a certain product or the way they've set it up, now that may be a red flag in the fact that, is there a reason why they're setting it up that way for you? So have they listened to all the things that you've told them in previous conversations, and are they setting it up so that it's allowing you to do things in the future as well? So I've seen in the past a lot of people, if they've gone direct to banks, now a big red flag would be that, the bank, a lot of the time direct, they want to minimize their risk. Okay. They're trying to bring it down as much as possible. So if a client has multiple properties, they already have a property, or they're purchasing another one, they like to bundle them together, or they call it cross collateralization, and they like to bring down their risk. So they usually will say, oh, we'll give you a better interest rate, but what happens then is when it's bundled together, when you go to sell a property, it becomes a little bit of a mess, and they may have to do revaluations and reassessments and whatnot. So things can get really messy, and people don't realize when it feels easy to go back to the bank that you're already with, because you've already got your account set up and whatnot, but it might not always be the best in terms of structure. And that's what I really like to help my clients, because going direct to the bank, you have only got one type of policy, one servicing calculator, and if they're looking to do future purchases, there may be really great options out there that they may be able to do higher borrowing power. Also, just setting up those loans in a way that is going to be able to create further lending in the future. So it's really important.
Do banks really look at spending habits?
Yes, they do. Now, not all banks, they've all got different, there's minimum living expenses that they use. And what will normally happen is if you declare living expenses that are a lot lower than the minimum HEM, it's called, they may want to dig deeper into that and go, why are your expenses so low? This just doesn't, it's way below what their minimum is. If you do have high living expenses, they will be inclined to use, they will have to use the higher of the two. So yeah,
when every time I even just, because we run off credit cards at home, we love it, but that works for us. But every time I'm applying for a new credit card, trying to get new points or whatever, I have to say like, all right, this month you've spent this amount of money on subscriptions, this amount of money on food or whatever. And we run a pretty tight budget, so it's pretty easy to do. But I remember when we first started doing it, and it's just like, right, Ryan, how much are you spending on car transportation? It's not until you start to calculate all the things. Subscription's got to be like the number one killer in anyone's budget. Jesus.
Yeah, so no, you're right. So there's certain things that like if they're ongoing, then you would. So for instance, we usually get a few months statements, right? So if they are every single month, it is the same, then you would say that this is what Ryan normally does. He usually always spends this amount on this particular thing, and that then they will be inclined to use that in that HEM, right? So if it's higher than the minimum, it's going to be pushed up higher, right? But if you've got, say, a one-off coffee, but it's here and it's discretionary spending, it goes up and down, and that's very normal for people to have that. They're gone on a holiday and it's been boosted up for a week, and that's just not a regular thing that happens every week, then that's they do go, okay, this is, they're going to take that into consideration. There's a lot of logic behind that too. So, but your broker should know how to read that and know exactly how to.
Who pays the broker?
So the banks do. So, or depending on the deal, if it's very complex, some brokers charge. So it really does depend on the file. But normally, if it is just a, most brokers won't charge if it's just would call it a vanilla loan, where it's just a purchase of a property, right? So it really does depend on the broker. Normally, the way it's set up is once the loan settles, then the broker will be paid commission directly from the bank, and they also get trailing. Residential mortgages, which are under NCCP, do get trailing commissions, and however commercial doesn't. It just gets a upfront commission, and that's how brokers make their money.
I have a confession to make.
Yeah.
And why do you look so scared?
I
just recently used the broker to buy a vehicle. And for whatever reason, I already see how disappointed you are in me.
I don't normally do a lot of asset.
Thank God.
But I've got a lot of partners that do, though.
Thank God, I feel better already. Anyway, Dom is his name. He's helping me out at the moment.
Yeah.
And I actually didn't know, the first quote I got, come back and they wanted $1,200 for me to use their services to secure the shuttle mortgage because I'm buying it under, whatever. So that was interesting because when they come back from the quote and they said $1,200 for us to do this loan, I went, so I rang my financial advisor. I said, is he meant to be charging me? And he goes, oh, no, typically on small amounts like that. There's no money in it for them. But
asset finance is very different.
I was under the. Then that's why I asked the question. I was like, so who gets paid in this?
Yeah.
But you know what? I want to move on to a couple of quick fire questions before we round up. So now, anyone listening, Candice doesn't know what I'm about to say. Just very short answers, okay? Are you ready?
Oh gosh.
Okay, quick fire. Fixed or variable?
It depends.
Oh my God.
Sorry.
All right.
Sorry.
Okay, go. Let's dive into it.
Fixed or variable, yeah, I can't say one or the other because it is so unique to the customer.
Okay.
Yeah. I would say people that really want they don't want to see their repayment going up and down, and they like comfort, they like stability. Fixed is great. Sometimes it just depends on the moment. Like sometimes the fixed rates are higher. They are at the moment. So yeah, and the variable, then you can take advantage of any interest rates that go down, obviously. The big thing with fixed is usually if it's 1 or 2 or 3 years or longer, you have to pay a release at the end of it. So if you decide to go and sell that property or refinance that property, you do have to pay out a fee to actually get out of that contract. So it can be quite costly. So if you you think you're going to do something soon again, you would probably want to be on variable. And also a lot of the time variable rate will have the offset account features as well, whereas a redraw, your fixed sometimes do, but most of the time they don't have that.
Okay. All right, ready for the next one?
Yep.
Best advice you've ever received?
Best advice I ever received... You've got to do the thing to be good at the thing.
Okay.
Okay. So you can prepare all you want and nothing will actually give you the experience until you do it. You won't get good at something until you actually do it and you actually try it.
Yeah.
So you can prepare and look at books and read all you want and
real life experience.
Real life experience.
Lived experience.
Exactly.
Absolutely.
Yeah.
Biggest mortgage myth as a tongue twister?
Biggest mortgage myth.
Yeah.
It's hard because I don't know. Biggest mortgage. Maybe the fact that people think that they have to pay up front for a broker. That could be one of them. But yes, sometimes you do. The biggest mortgage myth is going back to your bank and they're going to give you loyalty discounts. That's not true. You absolutely should ensure that you look at all of your options and make a decision based on what's out there rather than just going direct to your bank.
Best habits for financial success?
Investing in assets that are investment assets over depreciating assets. I think that is really important if you keep going and getting car loans and things that are going to depreciate over time.
Yep.
However, there is a caveat to that in that, yes, sometimes in cash flow in businesses and you need those sorts of things within a business. That's a whole nother things. But in terms of personal name, if you can bring down those assets that are not an investment like a property or shares or something along those lines rather than having credit cards and personal loans and things. Yeah.
All right. To round it up, let's give a shout out to your business. How can people find you? What's your links to social media?
Yeah, so baycrestfinance.com.au and on socials I'm also Baycrest Finance or Candice Carlisle. That's where I do most of my socials. I am on TikTok.
You are absolutely on TikTok. Your
that's
algorithm,
how you see me.
Yeah, your algorithm has got me nailed. Yes.
Oh, it is. Yeah, it's a crazy world out there on socials, but it's good fun. Yeah.
Hey, well, we would never have met if it wasn't for the power of social media.
I know.
So to round up, I've got one last question for you. If someone was listening today and wanted to buy their first home but feels a little bit overwhelmed, what is one piece of advice that you want to leave with them?
Time in the market, not timing the market, because waiting for the perfect time, it may not come. A lot of people I talk to are waiting for stars to align and they're waiting for things to line up perfectly, but they're already in a position where they can do it, but they just can't quite do it yet because they're worried. They're listening to headlines or they're listening to people they know or friends going, "Oh, are you sure are you sure it's the right time to buy right now?" And I really feel like don't think about it as a short-term thing. Think about it as a long-term. Really, what are you doing it for? You're doing it for your home, and thinking a longer-term approach rather than thinking about it as a quick thing that you're going to flick very quickly, because if you read the headlines in the media, a lot of the time you can get freaked out by it. And as a first home buyer, it's you do need a little bit of guidance and a little bit of confidence in what you're doing. So if I listened to all the things that people were telling me when I first bought, I probably wouldn't have done it.
Yeah.
So, and now, like you, it's just it's given me the ability to do things further from that now. So it's amazing what you can do, but you do have to be ready and feel confident in what you're doing and be positive.
Yeah.
Yeah.
Candice, thanks so much for coming onto the show. It's great to see you again. Say hello to the family for me.
Thank you.
Thank you,
Appreciate
everybody.
it.
I'll speak to you soon.
Thank you.